Hello everyone, welcome to today's session. So today we are going to continue the chapter number 7. I hope everyone has read what we discussed in the last session and everyone has gone through the points that we discussed in the last session. Anyone has any doubt till now with respect to whatever we have discussed? Anyone? Whatever we discussed in the last session. So just a quick revision, we went through the audit report in the last session, wherein we discussed about the structure of the audit report based on SA 700. Then we discussed on the critical points of SA 700, for example, where we discussed like, okay, what to do when the standards are different under which we need to issue the report, what to do when we are in a scenario where the report format is prescribed by the law. So all that stuff we discussed in the last session. So any doubt you guys have with respect to that? We also started the discussion on SA 705, wherein we discussed about the type of modified opinion, which are the modified opinions. And accordingly, we discussed like, okay, if there is a modified opinion, then what is pervasiveness and which opinion to be issued in case of a modified opinion. Like, out of the various modified opinions, which modified opinion is appropriate in what scenario? For example, when we can issue a qualified opinion, when we can issue an adverse opinion, or when we can issue a disclaimer of opinion. Any doubt? Okay. If no doubts, shall we proceed ahead? Okay. So what we are going to see today, we are going to carry forward the discussion on basically what is your modified opinion, number one. And second, again, we will see one example with respect to each type of modified opinion. Okay. So we are going to see again a quick revision of the modified opinion, and then what is an example, like how modified opinions are issued in real. Okay. And then we will jump to the requirement of SA 705. So see again, modified opinions are three types: qualified, adverse, and disclaimer of opinion. Okay. Now, in case of a modification of an opinion, first of all, we need to understand whether it's an adverse opinion, qualified opinion, or disclaimer of opinion. And that is totally dependent upon the pervasiveness plus the materiality. Okay. First of all, if it is a material, then it requires a modification. Number two, after having materiality, if it is pervasive, can anyone tell me quickly what is pervasiveness? Anyone?
So not a single assertion level, right? Complete.
Yes. So it is not restricted to a particular assertion. It is not restricted to a particular line item on the financial statement. It is not confined to a particular portion of the financial statement. Basically, it is something which is impacting majority of your financial statement. Now, let's say, for example, if it is not impacting majority of your financial statement, still it is impacting a substantial portion of a financial statement. Let's say, for example, we took an example of commercial company, commercial leasing company. So the company has fixed asset which they lease out. Okay. Now leasing is the only income for them, and the majority of the assets are commercial properties. If there is any material misstatement in the commercial properties, substantial portion of balance, and if there is a material misstatement in those commercial properties, that will turn into pervasiveness. So basically, not confined to a specific item or element in FS. Let's say if it is confined, still it is a substantial portion of FS. And in relation to a disclosure, the disclosure was fundamental to the user understanding. If these things are present, then I would say it's a pervasiveness. And when it is a pervasiveness and your materiality together, either it will go to the adverse opinion or it will go to the disclaimer of opinion. Clear? Okay. Now we will see one example of the qualified opinion. And we have, I think, seen in the last session also, but again, I'll show you one example of qualified opinion, one example of disclaimer of opinion. Basically, adverse opinions are very difficult to identify because very less companies receive a adverse opinion. So okay, so here it is, our example of a qualified opinion. Okay, now when a qualified opinion is issued, I'm talking about qualified opinion, not modified opinion. Both are different. And let's say, for example, if I talk about modified opinion, that includes your adverse opinion also. So as of now, I am discussing about only and only qualified opinion. Okay. So when a qualified opinion is issued at that particular point in time, what happens is, what we are required to do as an auditor. So we have seen, opinion paragraph, basis of opinion paragraph till now, as per SA 700. What SA 705 says, first of all, with respect to your qualified opinion. So SA 705 says that whenever you are going to issue a qualified opinion or any modified opinion, okay, whenever you are going to issue a qualified opinion or any modified opinion, first of all, make sure that you appropriately reflect that in the title. Okay, so the title now will become qualified opinion, adverse opinion, or disclaimer of opinion. As the opinion is, the title will become like that. Once you modify the title, okay, then on the basis of qualified opinion, if there is a missing particular presentation, you talk about that presentation, that what has missed. If there is a particular item that has been missed, then you talk about that. Plus, you provide the wordings that subject to this, everything is true and fair. Okay. So it provides that, okay, subject to this particular item, everything is a true and fair. Accordingly, you need to, alter your opinion paragraph. So here, if we see this example, we have audited, as of now, I would request not to focus on the name of company. We have audited the particular company financial statements of the company, which comprises of balance sheet, standalone profit and loss, comprehensive income, changes in equity, cash flow, notes, summary, and other explanatory information. Fine. In our opinion and best of our information and according to the explanation given to us. Now, this is a very important part that I'm going to highlight over here. That is, except for the possible effects of the matter described in the basis of qualified opinion paragraph below, this particular part reflects the qualification. This particular part, except for the possible effects. Now, why possible effects? Not the actual effects. Can anyone tell me? Can anyone tell me why possible effects are mentioned over here? Why not actual effects? Anyone? No? Okay. So, see, when I discussed about particular essay 705, we discussed about the materiality and pervasiveness. And at that point in time also, I discussed specifically that materiality and pervasiveness is not only related to the actual misstatement. Let's say, for example, disclaimer of opinion. Over there, you are not able to identify any particular evidence. You are having a missing evidence. Same way, if the evidence is missing, sufficient and appropriate evidence is not there, you will not be able to conclude on the misstatement. That's why when we issue a qualified opinion, not only at the time of actual misstatement, but when there could be a possible effects of undetected misstatement, because we are unable to obtain sufficient and appropriate audit evidence. So let's go back to our chart and discuss that once more. So remember this particular chart over here. If you see, when I'm unable to obtain sufficient and appropriate audit evidence, but the impact is not pervasive, but it is material. Again, impact not pervasive, but material, and I'm unable to obtain. In that case also, I issue a qualified opinion. It is not necessary that there is a missing evidence, then only, or I have a particular, identified misstatement, then only I will issue a qualified opinion. No. So unable to obtain sufficient and appropriate audit evidence, where I think the misstatement is material but not pervasive, I will issue qualified opinion. The same scenario over here. That's why the term possible effects have been used to demonstrate that they were not able to get sufficient and appropriate audit evidence. Rather, identifying the actual misstatement, they are saying they were not able to get sufficient and appropriate audit evidence. Okay. Then the aforesaid financial statement and everything is remaining same, and they will certify that, okay, we need to certify that it gives true and fair view. If you see, this one gives true and fair view. So they also say that it gives an true and fair view, but subject to the exceptions. And that exceptions are then specified in your basis of qualified opinion paragraph. Okay. So whenever you are modifying your opinion, whenever you are issuing a qualified opinion, at that point in time, you need to mention this. This is requirement of the standard. When you are reporting as per the fair presentation framework, at that time you need to say that financial statements in all material respect, okay, or give a true and fair view in accordance with the financial reporting framework, except particular for this particular items, subject to this particular items. So we specify that subject to this, they provide everything. They give a true and fair view. And in the basis of opinion paragraph, we specify the details that, okay, what is missing. Now, when we are giving the details in basis of opinion paragraph, that is a basis of qualified opinion, basis of adverse opinion, or basis of this, like the basis which is there, at that point in time, what we do, we have to provide the detailed description and the quantification of the effects, unless impracticable. Otherwise, we have to provide a detailed description and the quantification of the financial effects of the misstatement. If the misstatement relates to the disclosure, then you need to explain how the disclosures are misstated. If the misstatement relates to non-disclosure, then discuss the non-disclosure. First of all, what is a non-disclosure? The nature of the non-disclosure or the information which is omitted from financial statement. And if something, not prohibited by law, okay, then you need to also, provide that particular disclosure if practicable to do, so that, okay, this was the disclosure that is missing. Okay. So this is how you need to accordingly amend the opinion, basis of opinion paragraph. Let us see the basis of opinion paragraph over here. So what they are saying, that they draw attention to, just a minute, yeah. We draw attention to the following notes of the financial statement. Note number 52 related to a non-recognition of interest expense of this much amount for the year on the borrowings availed by the company, considering the process initiated for submission of resolution proposal. Consequently, interest expense and the loss for the year are understated by this much amount. Retained earnings and interest payable are understated by this much amount. This particular note relating to the deferred tax amounting to this crore represents amount recognized by the company in the earlier years. Considering the material uncertainty related to the going concern that exists in the company, the threshold reasonable certainty for recognizing deferred tax asset as per Ind AS 12 has not been met. Consequently, tax asset are overstated and retained earnings are understated by this much amount. See, they are providing you the overstated and understated impacts of the expense, the particular line item, and the particular like retained earnings. Sometimes they go to net worth, sometimes they issue the, if it is related to the profit, then profit. So this understatement and overstatement, okay, this understatement and overstatement, wherever mentioned, is nothing but your quantification of the observation. Okay, that is your quantification and justification of the observation. So they have provided the details also plus quantification in the observation, and rest everything is same. If you see, the rest of the paragraphs are same as they were under SA 700. So when there is a qualified opinion or a modified opinion, we first of all change the title, qualified opinion or modified opinion, whatever it is there. Then we change the title of basis of for qualified opinion or basis of whatever type of opinion it is. And in each of the paragraph, in first paragraph, in the opinion paragraph, we add this line that except to the possible effects. And then in the subsequent basis of the opinion paragraph, we draw attention of the readers on that particular observation that we are saying, the misstatement is there. Okay. And that what is that particular misstatement is, we provide a description and quantification. So this is how you are required to issue a qualified opinion. Any doubt? Any doubt, guys? No? No doubts? All clear? Okay. Now we will see a disclaimer of opinion. Yes, we will see a disclaimer of opinion that will help us to understand basically that, what is a particular type of disclaimer, what disclaimer of opinion looks like. Just a minute. I think there is some issue while opening the file. Just give me a minute. Okay. There is some issue with the file. I think there is some. I'll show you. Okay. So this is the basically disclaimer of opinion that I was talking about. Okay. Now, if you see, again, I would request everyone to not to focus on the name of company. It is just for the information purpose. The information is available in public domain. Now, when we are issuing a disclaimer of opinion, what we need to understand first that disclaimer of opinion is a scenario where auditor is not expressing an opinion. Okay. Disclaimer of opinion is a scenario where auditor is not expressing an opinion, first of all. Because auditor does not have any evidence, sufficient and appropriate audit evidence available with him, he is not expressing any opinion. Okay. And that particular item, like disclaimer of opinion, that auditor has to specify, okay, this is something we are talking about. Like, because of this particular scenario, we are not able to obtain sufficient and appropriate audit evidence to provide a basis for the audit. And as a result, auditor specifically says in the opinion paragraph that they are not issuing any opinion. Okay. So if you see in the disclaimer of opinion, it says like that we are engaged to audit the company's this is financial statement, standalone, everything that information is given. Then it comes, we do not express an opinion on the accompanying standalone India's financial statement. Because of the significance of the matter described in the basis of disclaimer of opinion and material uncertainty relating the going concern sections of our report, we have not been able to obtain sufficient and appropriate audit evidence to provide a basis for the audit opinion on the accompanying standalone financial statement. So the way we do in the qualified opinion, that subject to this, except to this, we have received everything, that goes to a change. We say we have not obtained straight away. We have not obtained obtained sufficient and appropriate audit evidence to provide a basis for audit opinion. Okay. So specifically, we say that, evidence is not available. And then here in the basis of opinion paragraph, disclaimer opinion, they provide the detail, what is missing, why they are not able to get the sufficient and appropriate audit evidence. So detailed things are mentioned one by one, each and everything. Okay, everything. And they are not saying that in qualified opinion, what we were saying that, okay, subject to this, then we came back to the normal paragraph that, okay, we have received the information as required. So if you see this particular paragraph is a normal paragraph that we conducted in our audit and we obtained the information, everything is written. Okay. And we believe the audit evidence we obtained is sufficient and appropriate to provide a basis of our qualified opinion. That is missing now. That we do not write because we have not obtained the audit evidence. Hence, this particular paragraph is not written, is not required to be written. Clear? Accordingly, your disclaimer opinion, changes. Like the way we saw qualified opinion, disclaimer opinion is changes that we do not express any opinion. And we have not obtained sufficient and appropriate audit evidence. So these kind of words and the language we use in disclaimer of opinion. Clear? Any doubt till now? Any doubt?
No, sir.
Okay. So this was your disclaimer of opinion. Okay. And based on this, now you can easily differentiate that, okay, what and how both opinions are different, although both are the part of modification, like modified opinion, but now you can easily identify the difference between both. Let's go to your study material first now, And over there, let's go to to the particular area of 705, and we'll discuss 705, how it is given in the study material. So that is on page number 7.25 in your study material. That is the 705 modifications to the opinion. Okay. First, your types of modifications are there. Okay. So qualified opinion, adverse opinion, and disclaimer opinion. Then you have the objective and the circumstances when a modification to the auditor's opinion is required. So when a modification is required, when either you say that they are not free from material misstatement, means material misstatement is there, or you are not able to obtain sufficient and appropriate audit evidence. So this gives triggers to the possible effect term. Now, when you add pervasiveness, then on the basis of that, it becomes either qualified, or, if pervasiveness is present, then it becomes adverse. Okay. So you have a misstatement that is material but not pervasive, that goes for the qualified opinion. Or you are unable to obtain sufficient and appropriate audit evidence. Possible effects of undetected misstatement could be material but not pervasive, it goes to the qualified opinion. Okay. Same way, the chart we discussed. Adverse opinion. Your opinion, adverse opinion, is when the misstatements are there, both material and pervasive. Here, I do not have the option of, undetected misstatement. Reason, because if I say there is an undetected misstatement because of because I am unable to obtain sufficient and appropriate audit evidence, and that is material and pervasive, that will convert to disclaimer of opinion, not adverse opinion. So identified misstatement, material and pervasive, adverse opinion. Unidentified misstatement, material and pervasive, your disclaimer of opinion. Clear? So that is your adverse opinion when you have identified misstatement, both material and pervasive. Any doubt? Any doubt? Okay. Now, disclaimer of opinion. When the undetected misstatement, okay, undetected misstatement have a possible effects of material and pervasive both. The one we just now saw. So to show you one qualification, or the basis of the misstatement, we will go over here. I'll show you that how they are saying that they have not obtained the evidence. See, we are not received sufficient and appropriate audit evidence in respect of reconciliations, confirmations, agreements, shares, and debentures. So there was some, direct balance confirmations for which they did not receive any, confirmation. Differences between book balances and confirmation received. Loan agreement extended to various group companies. Completeness of intercompany balances. They have not received pending completion of audit of financial statements. Physical certificate is not there. Management assessment. Okay, so management assessment is not there, basically. Then commercial substance and rationale. For recognition of liability, they are not able to ascertain. For non-allocation of this particular professional and legal fees, for accounting and disclosure related to a contract. So see, multiple things are there. And accordingly, we are unable to comment on the consequential effects of the above matters on the company's standalone financial statements. Okay. So what they are saying is there are multiple things based on which they are not able to get the details. They are not able to get the reconciliations. They are not able to get the assessments. They are not able to get any information with respect to that. And as a result, they are saying, okay, we don't have the sufficient and appropriate audit evidence. Clear? We discussed what is pervasiveness. Basically, the term that is when it is not confined to a specific element. If confined, it is a substantial portion of the financial statement. And in relation to a disclosure, the disclosures are fundamental to the user understanding. So here also we will see one disclosure related. If you see over here, as mentioned in note 38, the accompanying standalone of India's financial statement, the company is not in compliance with certain requirements in provision of applicable laws. Okay. With respect to non-filing of half-yearly financial results, non-appointment of this, non-registration, XYZ. Pending final determination by the management and other consequences arising from such non-compliances, we are unable to determine the impact of possible adjustments that may be required to be made to the accompanying standalone NDS. Okay. So there is some missing items which company has also not reported appropriately, and they are also saying because of which the impact or a possible adjustment they are not able to ascertain, and that's why they are saying the matter is a matter for the disclaimer of opinion. Okay. So here, if you see, this is particular related to the fundamental to the user understanding. It is not a financial thing, but fundamental to user understanding. It is not with respect to the financial matter, but it is a fundamental disclosure part. Same way, a lot of things are there which are, pretty, basically, they are the disclosure related. And as a result, the auditor over here has issued a disclaimer of opinion. Okay. So that is what pervasiveness is with respect to the disclosures. Now, the point here is that when you in case of the qualified opinion or modified opinion, okay, if you do not get sufficient and appropriate audit evidence, so is it something that our responsibility to issue a qualified or modified opinion, like, okay, we have not received the sufficient and appropriate audit evidence, let's go and issue a modified opinion, that is our responsibility, or something else is also there? So what is the auditor's responsibility when it comes to the modification? Can anyone tell me? Just to modify the report and insert the appropriate paragraphs, or there is something else also? Let's say, for example, I want to modify my audit report. I want to qualify my audit report. Qualify. Okay. Now, is there any responsibility on me that before qualification I should do these 10 steps or these five things? Is there something else also that I'm required to do?
Sir, talk with those charged with management, and any law and regulations prohibit to disclose something and some information, or
Hmm.
in a public interest. He might consider all the things कि मतलब उसके फाइनेंशियल को पढ़ने के बाद क्या उसका इम्पैक्ट इन जनरल पब्लिक में आएगा, वो सब कुछ सोचने के बाद वो डिसाइड करेगा कि उसे क्या ओपिनियन देना चाहिए.
Correct. Very good. Yes. Absolutely correct. So when I am going to issue adverse opinion, qualified opinion, or disclaimer of opinion, the first thing that I should do is I need to communicate with the management. I need to communicate with the management or those charged with governance. See, those charged with governance, this is the scenario. Okay. This is the limitation I'm facing. I'm facing the issue with respect to. I request you please look into this particular matter. Please look into this particular matter. Otherwise, if I do not receive the required information, I may have to issue a disclaimer of opinion, adverse opinion, or qualified opinion. So this kind of communication we have to do with the those charged with governance. Okay. And that is the auditor's responsibility. So we cannot say that, okay, directly, okay, no, the information is not there. Let's go and issue a modified opinion. No. before issuing a modified opinion, or in a scenario where I have not received the sufficient and appropriate audit evidence, my responsibility is to check with the management, to communicate those charged with governance. As per my essay, which essay is there where I'm required to communicate with those charged with governance quickly?
Essay 260.
Yes. As per essay 260, I need to communicate first. And then I need to, once I do a communicate, I try my all communication channels, I get all the responses. Still, I'm not satisfied. Then in that case, I need to issue the qualified opinion, modified opinion, or which kind of opinion, whichever the kind of opinion it is. Clear? Any doubts till now? Any doubts? Okay. If no doubt, then I have a question. My question is, can I issue opinion statement wise? For example, uh, unmodified opinion for PNL and modified opinion for cash flow statement, something like that. One statement, one opinion. Can I do that? Can I do that? Let's say I said, okay, cash flow statement, adverse opinion. Okay, or disclaimer of opinion. But PNL balance sheet, perfectly fine, unmodified opinion. Can I do that? This kind of opinion, breaking of opinions on statement wise. Is it allowed or not allowed? Yes, no, quickly. Okay, Ginny, very good. Anyone else? Allowed or not allowed? I am issuing one opinion on one of the financial statement. For example, balance sheet, unmodified opinion. PNL, unmodified opinion. Cash flow, adverse opinion. Can I do that? No? Okay. If this is kind of a scenario where I am, having different opinions on different financial set of, the financial statements, different financial statements. Understand one thing, your general purpose financial statement is a one particular set. Okay. If any of the component of that financial statement contains a misstatement, it is a misstatement of a general purpose financial statement. So you cannot have an adverse opinion or a disclaimer opinion on one single financial statement, which is different from the other single financial statement. So, for example, I cannot issue unmodified opinion and modified opinion of like adverse opinion or disclaimer of opinion in case for, let's say, cash flow or statement of changes in equity, something like that. No, my opinion is on the entire FS. Okay. If I have to issue a separate opinion on single financial statement, again, it is not like that you cannot issue a opinion on single financial statement. Yes, there are scenarios where you have to or you might have to issue opinion on the single financial statement. Okay. So when that happens, can anyone tell me when you are required to issue separate opinion on single financial statement? So if auditor is required to issue separate opinion on single FS. When an auditor, so is does do you know any particular scenario under which scenario this is covered?
So in case of joint audit,
Anyone? Repeat my question again. Do you know any of the scenario where auditor is required to issue separate opinion on single FS? If yes, then is applicable. Case of separate was which standard is applicable when the auditor is required to issue a separate opinion on a single financial statement? So it is your essay 8C in the chapter number 8. Essay 805 basically covers the scenario is required to issue opinion on the single FS.
Sir, video and voice getting stuck.
Sorry, you were saying something?
Sir, your video and voice.
Voice is not there? Appropriate?
Yes, sir. So whatever you told for essay 805, I couldn't hear.
Am I audible now? No?
Yes, sir. Yes, sir. Now you are audible.
Okay. Might some internet connection issues. Apologies for that. Okay. So just let me know if I'm audible, if I'm not audible in the chat, so that I can get it immediately. That my voice is not going through. Okay. So till where you अशोक ब्रेक हो रही है अच्छा just give me a minute, let me check the problem. Let's take a can we initiate a break of 5 minutes. मैं एक बार देख लेता हूँ क्या Let's initiate a break of 5 minutes, guys. Just let me check what is the issue going on. Hello, everyone. Apologies for the IT issues. Okay, let's continue back. So, the question earlier was that we were discussing before the IT issue that if auditor is required to issue separate opinion on single FS, then which was the standard that auditor is required to follow? The answer was SA 805. In certain scenarios, auditors are required to issue separate opinion on single FS. Yes, that is possible. That is there. Okay. When auditor is required to issue separate opinion. In that scenario, two different opinions cannot be there. Then two different opinion cannot be there. For example, that is if there is adverse opinion or disclaimer of opinion on your full set. Okay, if there is a disclaimer opinion or adverse opinion on full set, then single FS cannot have unmodified opinion. We will see this particular kind of scenario when we will discuss chapter number 8, that when auditor is required to issue opinion on single FS, single financial statement, as per SA 805. At that point in time, two different kind of opinions should not be there. That okay, full set says adverse opinion or disclaimer opinion and single FS unmodified opinion. No, you cannot have. Or vice versa, you cannot have. Remember that. Okay. So, two different opinions. Okay. Two different opinions on single FS or full set cannot be present. That is the first thing that we have to understand. That is clear? I hope this is clear. Yes, no?
Sir, I cannot send any message on chat.
Uh, it might be active. Like, is there any specific problem you are facing?
Yes, sir, it is a message is coming. CA Harshad Tekwani is not in this meeting.
Oh, uh, Ajit ji, if you can check, students are not able to post their queries. It is showing them that I'm not present in the meeting. Okay, meanwhile, you can just directly let me know if chat is not working, no issues. You can directly let me know. Okay.
No
So,
doubt, sir.
any doubt?
No doubt, sir. Clear.
Okay, no issues. Great. Okay, now let's proceed further. Further, what we need to understand here is the impact of disclaimer of opinion on other paragraphs. So we understood the impact of disclaimer of opinion on the paragraph, which is basically your opinion, basis of opinion paragraph. But apart from that, there are other paragraphs also in your audit report which may have impact because of your disclaimer of opinion. So let's go and I'll show you. See, here it is the auditor's responsibility paragraph. Remember, in auditor responsibility paragraph, we used to specify that auditor's responsibility is to obtain sufficient and appropriate audit evidence. Remember, in the previous session also we discussed that auditor responsibility includes to obtain sufficient and appropriate audit evidence.
Yes, sir.
Yeah. Now, when it comes to disclaimer of opinion, over there we cannot say that we have obtained that. We will say that is what is the auditor's responsibility. But when we will identify, when we will say there is a disclaimer of opinion, at that point in time, we will say in the auditor's responsibility also that, however, because of the matter described in the basis of disclaimer of opinion section of our report, we are not able to obtain sufficient and appropriate audit evidence to provide a basis for audit opinion on these standalone financial statements. So in the responsibility paragraph also, we will specify this that okay, our responsibility is to obtain evidence, fine. But because we are not able to obtain the evidence in the auditor's responsibility paragraph, we are saying that okay, that we are issuing a disclaimer of opinion because we have not obtained, we were unable to obtain sufficient and appropriate audit evidence. So disclaimer of opinion will have an impact on auditor's responsibility paragraph also. Clear? So disclaimer of opinion will have an impact on auditor's responsibility paragraph also. Now, another important point, which is that, we will discuss also in detail on the next standard, but that is about key audit matters. So as of now, just I will let you know that when you issue a disclaimer of opinion, or when basically, like you issue opinion, like you are not issuing any opinion. Disclaimer opinion is kind of a scenario where you are not issuing any of the opinion. At that point in time, you cannot say that this is a key audit matter item. You cannot conclude that this is a key audit matter item because you never received any sufficient or appropriate audit evidence for that. Okay. So with a disclaimer opinion, we do not report key audit matter. As of now, just park it. Okay. We will discuss in detail when we will discuss SA 701. Okay. So let's go back to your study material and let's see what is there. So consequence of inability to obtain sufficient and appropriate audit evidence. Okay, in that case, we will communicate the matter to those charged with governance that we discussed. If auditors decide to withdraw, then auditor needs to communicate to those charged with governance any matter regarding misstatement. Now, where withdrawal is not permitted, I will take up this point separately with Companies Act, okay, with section 143. When withdrawal is not permitted. So there are scenarios where withdrawal is not permitted. We will discuss this particular circular in detail. Okay, so as of now, park it on side. Yeah, other consideration relating to an adverse of disclaimer of opinion. So that was I was talking about two different opinions. Two different opinions are not allowed. Two different opinions should not be issued. Okay, and if you want to refer the same, you can go on chapter 8, page number 8.13, essay 805. You can give a cross reference to chapter number 8, page 8.13, essay 805, where this point has been discussed again in detail, because you issue an opinion on single FS as per essay 805. Okay. Now, form and content of audit report when opinion is modified. So form and content, what it changes? Heading, first of all, as we discussed, disclaimer of opinion, qualified opinion, or adverse opinion. Okay. So that is the first thing that gets changed. Second, when you modify, okay, when you modify, at that point in time, your basis of opinion also changes. Now, the point that I was talking about, that disclaimer opinion on financial statement and key audit matters should not be there together. So, disclaimer of opinion and CAM should not be there together. Remember that. When you are issuing a disclaimer of opinion, do not include key audit matter. And that is as per SA 701, we will discuss again in SA 701. And that at that point in time, we will come back to this particular point. Then your basis of opinion paragraph will change, the heading of basis of opinion paragraph. Okay, you have to include a description of the matter that is giving rise to the modification. Quantitative disclosures are required. Specific amounts are required when there is a modification. Unless impracticable, means if it is not practicable to quantify, in that case, you can state that it is not practicable to quantify. Okay, but if it is possible to quantify, then quantitative disclosures are necessary. A description and quantitative disclosures, quantification of the misstatement. If it is a narrative disclosure and misstatement is related to that narrative part, something, written statement, then you need to provide what is missing, how the disclosures are misstated, what is written wrong. So you need to explain in the narrative terms what is wrong when it is related to the disclosures part. Okay. If there's a non-disclosure of information that we have discussed, then discuss that what is the non-disclosure, like, what is the missing nature of the information omitted, like what kind of information which is not there. Okay. And if it is not prohibited by law, then include those omitted disclosures. If law does not, regulate you or restrict you from including those omitted disclosures, then include your those omitted disclosures in your basis of opinion paragraph. Okay. Accordingly, you need to specify that you are not able to obtain sufficient and appropriate audit evidence in your basis of opinion paragraph. Again, when qualify or adverse reports is there, you need to provide the word appropriately in your audit report. Okay. And when there is a disclaimer of opinion in your audit report, like you are issuing a disclaimer of opinion, at that point in time, remember I discussed that your auditor's responsibility section will undergo a change, that you need to specify that you are not able to obtain sufficient and appropriate audit evidence. Okay. That and a statement that audit evidence obtained is sufficient and appropriate to provide the basis of auditor's opinion should not be there. Okay, these items shall not be there. One, that auditor's responsibility that we have seen in SA 700, that should not be there. Number two, that you obtain sufficient and appropriate audit evidence, because you are not obtained. That's why do not include in auditor's responsibility paragraph. So your auditor's responsibility paragraph will go a drastic under change. Will go, like it will be totally different. See over here that your normal auditor's responsibility is not there. Like the other auditor's responsibility paragraph we have seen. If I show you one more, see auditor responsibility paragraph. This is auditor responsibility. Their objectives, identify risk assessment, internal controls, appropriateness of accounting policy, all the things we have discussed in last session. Remember? Now, all that is not reported over here because it is a disclaimer of opinion. And disclaimer of opinion directly has impact on the auditor's responsibility. You do not specify the auditor's responsibility as it is there as per SA 700. Okay. If SA 700 says that you need to provide these details, so accordingly that particular paragraph is not applicable in disclaimer of opinion. And you are not required to comment that whether you have obtained the sufficient and appropriate audit evidence or no. Rather, you should state that you have not obtained the sufficient and appropriate audit evidence. Clear?
Yes, sir.
Yeah. And so that is with respect to your disclaimer of opinion, or when you are unable to obtain sufficient and appropriate audit evidence. So this is a very good metrics given in your study material on 7.39, which talks about which kind of opinion to be issued. Okay, very important, I would say. It can serve as a point of quick revision. That financial statement materially misstated. So material misstatement is there, but not pervasive. So qualified. Inability to obtain sufficient and appropriate audit evidence. It is material but not pervasive. Then qualified. But if material misstatement, both material and pervasive, it will go to adverse. Inability, both material and pervasive, it will go to disclaimer of opinion. So very good reporting table, which is given on page number 7.39 in your study material. So that was your essay 705 in study material. Any doubt with whole essay 705? Any doubt, guys? Or you might not, you were not able to get any of the part due to some, earlier IT issues.
सर एक बार वो जो आपने 805 से जो लिंकेज बताई थी वो वापस रिपीट कर दीजिए, जिसमें आपने बोला था कि 2 डिफरेंट ओपिनियन लाइक डिस्क्लेमर और मॉडिफाइड ओपिनियन, हम लोग दोनों साइमल्टेनियसली 2 डिफरेंट फाइनेंशियल्स के, मतलब 2 डिफरेंट सेगमेंट के लिए यूज नहीं ले सकते, लाइक बैलेंस शीट और कैश फ्लो के लिए. बस दैट इज द पॉइंट यू सेड, राइट सर?
So basically, what is the scenario here is that in certain cases, as an auditor, I am required to issue opinion on single FS. When I say single FS, it means PNL, it means only cash flow statement, only statement of changes in equity, or only balance sheet. So there are scenarios or cases where, as an auditor, I am required to issue opinion on single FS as per SA 805. Now let's suppose I have issued adverse opinion on full set of financial statement. That is, pervasiveness is present, means the misstatement is on the substantial portion. Because of the pervasiveness, I have issued the adverse opinion. Now, can I say that a particular single FS is unmodified? Let's say on full set, I issued adverse opinion. Now I'm issuing opinion on only PNL and I'm saying unmodified opinion. That will be incorrect. The reason because when I issue adverse opinion, I say material misstatement is also pervasive, means it is to a substantial portion. And let's say if a misstatement is only in the balance sheet or in some part of the balance sheet, but not in PNL, then how can you say it is substantial? How can you say it is pervasive? Either your adverse opinion is wrong, or the opinion that you are issuing right now, unmodified opinion on single FS, is wrong.
Got it.
So, two different type of opinions, one on full set, one on single FS, like adverse or disclaimer on full set, and unmodified on the single FS, will create a kind of a scenario that your both opinion are contradictory. So that should be avoided.
Got it, sir.
Any other doubt, guys? Any other doubt? Any other doubts? No? Okay. So that was your essay 705 from your study material that we discussed. Okay. I could not show you the adverse opinion. The reason because it is very difficult to identify an audit report with the adverse opinion. If you guys know some example, then do let me know. I'll share it. I'll present it. But usually adverse opinion are very rare, rarest of rare. I could find the disclaimer of opinion, but adverse is very rare. Okay. So that's why I was able to share the disclaimer opinion and the qualified opinion that we have discussed with our examples also. Now, I will, if no further doubts, I will proceed to the next topic. The next topic is your key audit matters, SA 701. So before I proceed, before I start discussion on an SA 701, can anyone tell me what is the key audit matter? If you have read the chapter, can anyone tell me what is key audit matter? Anyone? What is a key audit matter?
Sir, going concern.
Okay. One going concern is a key audit matter. Okay.
Sir, like assessment of impairment.
Okay. So is there a list of key audit matters that we need to follow?
Sir, might be yes.
Okay. Anyone else with a different answer?
Or sir, here is determining factor given in the book. 3 factors which needs to be giving the definition of key audit matter. That's that apply by the auditor, and to find out the what he think.
Yes, yes, absolutely correct. Absolutely correct. Correct, Sumit. Uh, correct, Jenny. Very good. Okay. So what is a key audit matter? First of all, understand key audit matters. Like from now, we will discuss key audit matters. We will discuss EOM paragraph, other matter paragraph in the subsequent essay. All these things are not your modified opinions. First of all, key audit matter is not a modified opinion. So, key audit matter is a matter or the areas which were most significant as per the professional judgment, as per my professional judgment, auditor's professional judgment, they were of most significance in the audit of financial statement. Means I felt that this particular area was very difficult. This particular area is so critical that it should be a key audit matter. It was difficult to audit. It was very important, complex, time consuming. A lot of things can be there. Okay, but in my professional judgment, this was of most significance, and that's why it should be a key audit matter. Now the question is, what if there is a some misstatement in that particular area? Will it still be a key audit matter?
It is
Anyone?
significant. If it is significant, then it should be a key audit matter. Material and significant. Material and significant.
Okay, good, Sumit, very good. So the answer to this particular question, okay, is no. If a particular item or if a particular matter which you are calling as a key audit matter, if that contains a misstatement, it goes to the qualified opinion. It will no longer be a key audit matter. Again, it is not a substitute for the modifications. Key audit matters are not modifications, first of all. They are matter of most significance. That is for sure. They were complex for sure. But at the end, you were able to get sufficient and appropriate audit evidence. You were able to audit that particular area by applying some procedures. And at the end, you did not identify any misstatement. So key audit matters are those areas. Number one, that in auditor's judgment, okay, they are of most significant. They are of most significance in auditor's judgment. Okay, so that is the first point. Second is that it should be from the matters communicated to those charged with governance. Now, can anyone tell me why this second criteria is there? Why I need to select from the matters communicated with those charged with governance? What is the reason? Why can't I have a matter which is not communicated to those charged with governance, but it can be a audit matter? Why can't I have that kind of scenario? Trust me, very important question. If you have focused earlier, you will be able to get the answer to this. No, Sumit. Again, the question is why? The matter should be one of the matter that is reported to those charged with governance. Why it can be a matter which is not reported to those charged with governance? I'm still no, Sumit. Think once again. Like why it has to be a matter which is required to be from the matters reported to those charged with governance. Anyone? No? This goes back to the chapter number 2. If anyone can remember essay 260, remember essay 260 when we were discussing essay 260, I specifically said there are certain matters that the auditor is required to communicate to those charged with governance. And over there, we discussed one point that matter which are significant, okay, either they are findings or observations which may include significant difficulties encountered during the audit or significant matters that are already being discussed, like significant matters. We were discussing that particular part, remember that
Yes, sir.
under essay 260, auditor is required to communicate with those charged with governance on the matter which are significant and relevant to their responsibility. When I come to chapter number 7 and essay 701, I say of most significance. Now, if that was of most significance, then you might have complied at the time of essay 260 that you might have reported that matter to those charged with governance. If this is not done, trust me, if this is not done, then non-compliance to essay 260 will be there. Of essay 260 will be there. Because you are required to communicate matters of significance to those charged with governance. So that's why your key audit matter has to be one of the matters which is communicated with those charged with governance. Clear with this? Why this second requirement is there? Any doubt with this? Are you clear with this second requirement? Yes, no. Am I audible? If I'm audible, then let me know in the chat also. If, like, sometimes I feel like I'm not audible. Okay. Shall we proceed then? Okay. Now, we have seen, okay, these are the key audit matters. If a non-compliance is there to the, if the matter is not from the matters communicated with those charged with governance, it will be a non-compliance to 260. As I said, it is not a matter of modification. So key audit matters, okay, should not be modifications. So if I talk about exclusions from key audit matters, so your items that requires modification as per SA 705. So modifications are excluded. Matters require disclosure as per going concern. Okay, that is material uncertainty paragraph. Your material uncertainty paragraph. That is also excluded from key audit matters. Matters required disclosure as per applicable financial reporting framework means it should not be used as a substitute for the disclosure in FS. For example, management will come to you and say, okay, let's do one thing. What you do is we have not disclosed in the financial statement this particular matter, but you disclose in your key audit matter section. No, it is not a substitute for the disclosure of financial statement as per the applicable financial reporting framework. Understand that. Key audit matters. It's not a modification. It's not for a substitute of a going concern paragraph. It's not a substitute of a disclosure as per the financial reporting framework.
सर ये जो अपने मटेरियल मैटर रिक्वायर्स डिस्क्लोजर एज पर 570 लिखा है, यहाँ पे मटेरियल अनसर्टेनिटी एग्जिस्ट और नॉट एग्जिस्ट
Exists.
आपने
That's why you, yeah.
एग्जिट है तो एक्सक्लूजन है बिकॉज पूरा का पूरा ही एडवर्स हो जाएगा, राइट?
नहीं. You can have an
I'm
unmodified
confused with
opinion with
that.
material uncertainty paragraph.
I'm confused. मतलब like आपने वहां पे 2 पॉइंट समझाए थे, नॉट एग्जिस्ट और एग्जिस्ट.
Okay, I'll show you this example. Wait. So we will see one particular example where material uncertainty there.
Again,
But
link that ऐसे because
yes,
जैसे
let me show you and let me link also. Don't worry on that. So this was the audit report. Okay. Now here, this is an unmodified opinion. Over here, we have a material uncertainty paragraph that we discussed in that lecture also. What we discussed is there could be events. Okay. There could be events. There could be conditions indicating a material uncertainty which cast a significant doubt on the company's ability to continue as a going concern, provided the company, the management has appropriately disclosed that in their financial statement. So this attention is invited to note number 30. That shows that disclosure is there by the management. If appropriate disclosure is there by the management, events and conditions are there, and at the end you say the going concern basis of accounting is appropriate. So the going concern basis, considering the status of the resolution process and steps taken by the board, reconstitution of board, is appropriate. So they are saying going concern basis is appropriate. Okay, material uncertainty there, appropriate disclosure by management there, appropriate going concern basis is there because of the reasons behind it. Okay, in that case, I would say I would disclose material uncertainty as an auditor to bring the attention of the user in audit report through this paragraph. Plus, I will add this particular point. The point is that my opinion is not modified in this respect, because everything is fine. We are just giving a disclosure.
Got it, sir.
So when we discuss SA 570, we discuss scenarios. Okay, one scenario when there is a material uncertainty. Now, material uncertainty, then there could be two, outcomes of that. Management has disclosed, management has not disclosed. If they have not disclosed, then you need to assess the impact, whether it is material or pervasive. If management has disclosed, then disclose it through a para that and bring the attention of the user. If everything is fine, use of going concern is fine, just disclose as a separate para in your audit report. And you have to add a line that our opinion is not modified. Now, second was when material uncertainty is there and the use of going concern basis is not appropriate. In that, again, two situations. Management used the going concern basis. Management did not use the going concern basis. If management has not used the going concern basis of accounting, so whatever basis of accounting has been used, you need to verify that. Matter over, you need to report it, same as per the material uncertainty paragraph. And if the basis of accounting, which is not going concern, something else is appropriate, then again, you will not issue a modified opinion. But if you say going concern basis is not appropriate, material uncertainty is there, going concern basis is not appropriate, and management still has used going concern basis, at that point in time, adverse opinion, no qualified, nothing, direct adverse, whole financial statement is not prepared appropriately. So this was the disclosure requirement of SF 570.
Got it, sir. Remember. Now I can recall my.
Yeah.
Yes, sir.
So now let's go back to the SA 701. So the matters that requires disclosure as per SA 570 going concern, that is material uncertainty paragraph, that is different. It should not be a CAM. Going concern, material uncertainty should not be a CAM. Let's say management did not disclose the material uncertainty appropriately. Management did not disclose the material uncertainty appropriately. In that case, you already are going to modify your opinion as per SA 705 and it will become part of this particular item. So if management has not disclosed, it will be a modification again out of the CAM. If management has disclosed but material uncertainty is there, SA 570 again out of the CAM. So going concern material uncertainty related paragraph will not be part of the CAM. Clear?
Clear, sir.
Now, the question comes back on that we say that in auditor's judgment were of most significance. Is there some, some information or some, definition given? What is most significant? How can I identify these are the matters of most significance? Can anyone tell me, okay, most significance, but based on what? How can I determine, okay, this item is of most significance? Is there any criteria? Yes, no. So can anyone tell me, is there any criteria where I can say, okay, these are the item of most significance? How can I determine which are the item of most significance? Anyone? No? Okay. So SA 701 itself gives you the list of factors through which you can identify the matters that are of most significance. Number one, it is the areas of higher risk assessment. Okay. If a particular area is of a higher assessed risk, significant risk, fraud risk, and that area will become of that area can be counted as an area of most significance because there is a higher risk of material misstatement. That is a material area plus higher risk of material misstatement. So first is that area is of higher risk of material misstatement. Second is it involves significant judgment, management judgment areas, or accounting estimate, high estimate uncertainty, management biasness. Okay, so if an area that include management biasness, high judgments, management judgment, or high estimation uncertainty, in such a scenario, that particular area can also be called as a most significance. Okay, so higher assessed risk of material misstatement, then significant management judgment or areas related to the estimates, okay, which has a high estimate uncertainty. Again, you can refer back to essay. Which essay was there on accounting estimates?
I say 540.
Yes, essay 540. So over there, we we know that what is areas which can have the estimation uncertainty. Okay, how to identify basically those estimates which could be most where could be there where there could be more management bias. Okay, then comes the last part, which is that uh, that particular transaction or an event has a significant effect on the financial statement. That particular transaction or event has a significant impact or effect on the audit of that particular financial statement. For example, let's say there is a merger, there is an amalgamation. So the effect on the audit of those events and transactions will be higher because they will impact a lot of items. Basically, we will consider the effect of those transactions during the audit or significant events, not only transactions, but any significant event. For example, there was a fire, all the stock got burned. Now, the question was on the valuation of the scrap that was there as a closing stock or whatever stock was left. If management was able to do valuation appropriately, able to identify or segregate the good stock versus the burnt stock or the scrap, okay, and at the end management was able to calculate a provision that was appropriate after considering the insurance claims and everything, and you did not identify any misstatement, then it could become a key audit matter. Clear? So these are the three factors that can help you to identify key audit matters. Any doubt?
Sir, the last example you have told about the fire, can you please explain it again? You have told the if not significant.
If not, if there is no misstatement in that particular area. Okay.
Yes, sir.
Now the thing is, let's say for example, there is a transaction or event that has a significant impact on the financial statement. For example, there was a fire in the godown.
Yes, sir.
Now that fire burned a lot of inventory. That transaction or the event, I'm talking about this event of fire, had a significant impact on the financial statement because it impacted inventory negatively.
Yes.
Usually, what is the scenario when a fire happens or inventory get burns is company has to identify the good versus bad, okay, which is the good versus the bad, and then for the bad they need to file the insurance claim, and they need to appoint a valuer to assess the value of the good. Like, okay, if it is something little bit damaged, it cannot be a scenario, okay, this is 100% fine, this is 100% not fine. There could
Yes.
be an inventory in between, like 50% fine, 70% fine, 20% burn, something like that, which requires a repairs and something. So they
Yes.
require valuers to value those kind of inventory. Okay. And for the insurance one also, like insurance valuer will come and value the burned inventory for the insurance claim. Let's say management did everything fine, appropriately. Valuation of the good inventory was perfect. Valuation for the burned inventory, insurance claim, everything was recorded appropriately as per the financial reporting framework. you audited, you also got sufficient and appropriate audit evidence, and you are satisfied whatever management has disclosed. Like management made the provision, management has the disclosure in the financial statement, everything is done perfectly fine. So there is no point of qualification, first of all. Although, I could say this is a event, significant event, but does not require a qualification because everything is fine. Okay.
Yes.
Now, because this event has a significant impact on your financial statement, not only on the inventory, but the provision, okay, that is required to be booked for the damaged inventory or for the repairs of the good inventory that is required. Or, sometimes the fire also impact your property, plant property and equipment, okay, or the warehouse itself, the land and building. So it could impact multiple things in your financial statement. Means that particular event can have a significant effect on the financial statement. Because it can have a significant effect, you can say this is a significant matter as per the auditor's judgment, and that can become a key audit matter.
Yes, sir.
So events or transactions that had a significant effect on the financial statement can also become a key audit matter, provided you have also reported to the management or to the those charged with governance appropriately under SA 260.
Yes, sir. Clear, sir. Thank you, sir.
Any further doubts with respect to these criteria? No? Okay. So these are the matter of most significance. So the factors to determine the matter of most significance. Now the next question comes is, okay, we have identified the matters of most significance. What to do with them? We have identified the matters. We have identified, okay, these could be key audit matters. Now what to report for them? What to report for these key audit matters? Can anyone tell me what is the reporting requirement for key audit matters? Anyone? What is the reporting requirement for key audit matter? No? Okay, no issues. What we will do is the reporting requirement, we will understand with an example. So we will see an example and we will try to understand what is the reporting requirement. By this way, we will be able to understand, okay, this is how the reporting is done. Okay. So let's see the reporting requirements of the key audit matter, how they are reported. Let me So I will use again one of the reports that we have already discussed as an example. Again, information is available in the public domain. You can go and check. Okay. Now we specifically, in the earlier session also we left, or we said, okay, we will discuss key audit matter paragraph later on. Okay. We said that we will discuss the key audit matter paragraph later on. So now we will discuss this key audit matter paragraph. Okay. Now, if you see in this key audit matter paragraph, basically what is the scenario? First of all, we specify what is the key audit matter. We specify in detail, okay, this is the key audit matter, like how we, identify as a key audit matter. So basically we know what is a key audit matter, but whether the reader is aware about what is a key audit matter, answer is no. And that's why we have to explain what is the key audit matter to the reader of the financial statement. Okay, this is the key audit matter and how these key audit matters are identified. Okay, So by this way, we bring, understanding of the reader on the key audit matter paragraph. Then once we bring the understanding of the reader on the key audit matter paragraph, we then enumerate or we then list down all the key audit matters. Okay. And how we list down is, first, if you see over here, okay, we have provided the key audit matter description and the auditor's response section. Okay. We have provided in two different sections. Number one, the key audit matter itself and the auditor's response. Now, why auditor's response is required? The reason is because I'm saying that this particular part, this particular item is not an item of modification. Means I have done something as an auditor to audit this particular area and I have successfully obtained sufficient and appropriate audit evidence. Okay. So what I'm saying is that this particular area was critical area. What of most significance? Like high risk of material misstatement. Okay, there was a high estimate uncertainty. There was a there was a significant event or transaction that has a significant impact on the financial statement. Okay, yeah, I'm saying all that stuff for the key audit matter. But at the same time, I'm saying my opinion is not modified. This is not a modification. So I have to provide what I did as an auditor to audit this particular area. Why I'm saying that, okay, this is not modified, what I have done. And that is there in the auditor's response. Clear with this? The two sections which are there, number one, the key audit matter itself, and the second one is that auditor's response section. That's why we need to have the auditor's response section. Again, I will show you the audit report that we discussed in the last session for understanding the structure of the audit. Okay, audit report. Over there also, like, the different audit report. But again, same, the key audit matter and how the matter was addressed in our audit. So what is written over here is, we will start reading that key audit matters are those matters that in our professional judgment were of most significance in the audit of the standalone financial statement. Again, they are using this term, were of most significance in the professional judgment. Now what they are saying is, these matters were addressed in the context of our audit. Means they were addressed means sufficient and appropriate audit evidence was obtained for these matters. Okay. And we do not provide a separate opinion on these matters. Means these are these matters are not of separate opinion. The opinion that we have issued over here is the only opinion. We are just highlighting certain matters. So this is not a modification. Let's read the key audit matters to understand how they are actually reported. Number one, recognition of deferred tax asset and unused tax losses. So they have provided the reference to the standalone financial statement, first of all, where the item is there and why it is key audit matter. Let us read. As detailed in the note 28 of this financial statement, during the year, the company has recognized DTA of 1248.9 CR on brought forward losses. The company assess its ability to recover the DTA at the end of reporting period, which is based on the assessment of probability that the future taxable income will be available against the carry forward unused tax losses can be utilized. And that is as per your Ind AS 12. As per the assessment done by the company, it expects to earn sufficient taxable profits based on the improved business performance and reduction in the interest cost in line with the plans for a reduction in net debt and all that stuff which is there. Recognition of DTA involves assessment of its recoverability within the time frame permissible and requires a significant estimate of the financial projections and availability of the future taxable income. Now focus, they have identified it is a significant estimate considering the history of losses complexity, judgment involved in the assessment of recovery of deferred tax asset, the matter is considered to be a key audit matter. So they are providing this basis, okay, because of the history of losses, complexity, judgment, significant estimate, we are considering this as a key audit matter. So first, description of the matter, then why this is a key audit matter. So if I talk about this particular part, from here to here, this particular whole part is your description of key audit matters. Okay. Now here, this particular part is nothing but your detail about why this is the key audit matter, why I think this is a key audit matter, the reason for the key audit matter, or selecting this item as a key audit matter. Okay. So the first part is description of the camp. Second part is the reason why this is the key audit matter. Now let's go to the second section of the key audit matter reporting is the auditor's response, that how the matter was addressed in the audit report or in the audit basically. Now, if we read that in the view of the significance of the matter, we applied the following audit procedures in the area to obtain sufficient and appropriate audit evidence. So what procedures were applied? Test of controls and test of details. One, we tested design, implementation, and operative effectiveness of the management review controls. Okay. Over the key input assumptions used to produce projections and taxable profit. So they are talking about what they did with respect to the test of controls. Now, test of details evaluated the historical forecasting accuracy, okay, of key assumptions such as volume, revenue, profit before tax by comparing them to actual results. Reading the minutes of meeting to verify that the budget has been approved by the board of directors. Performed a sensitivity analysis on the key inputs to independently identify, estimate a range of comparisons, checked arithmetical accuracy, involved a taxation specialist to verify the computation. Now here they are talking about auditor's expert. Performed necessary procedures to verify the accuracy of amounts disclosed in the financial statement and disclosure made for the compliance with the applicable Indian accounting standards. So they are talking about the disclosure. Okay. This is a separate matter, key audit matter. Till here it is. So this is how they have addressed the matter in the audit report. So this is how the matter was audited. How CAM was audited. So if you read the key audit matters, you will come to know how the key and significant matters are audited. So this gives an understanding to the reader of the financial statement that how audit is performed for these particular areas, what evidence has been collected, what test has been performed to gather the evidence. So the reader can get more comfort on the key audit matters. Clear with the reporting part of the key audit matter? Any doubt with respect to the reporting part of key audit matter?
No,
Yes,
sir.
no, no. So in a key audit matter, if I have to summarize, you need to provide the description of the key audit matter, reference to the disclosure in FS if it is available, why the matter was considered to be most significant, and how the matter was addressed in the audit. Okay. So this is something, how the matter was addressed in the audit is the secondary part, is second section. And this is the first section. This whole particular point over here, from the description to why it is considered as the most significance or key audit matter, is the first section. So what to report is there and how to report each section like this way. This is your key audit matter. Any doubt with respect to key audit matters? There is one point that I want to discuss, but first of all, any doubt till now on key audit matters?
No, sir.
Okay. Now, coming to the area where we discussed about key audit matters and your disclaimer of opinion. Okay. Now let's say we discussed about disclaimer of opinion. What is disclaimer of opinion? No opinion is issued. Fine. Now, if I say no opinion is issued, I have not received sufficient and appropriate audit evidence. In that case, how will I give a comfort on key audit matter? The second section of the key audit matter is how the matter was addressed in the audit. But when I say disclaimer of opinion means I did not have any evidence available with me. I was unable to get the audit evidence. If I am seeing for the majority of the portion, substantial portion of the financial statement, material and pervasive, I'm saying I did not have the audit evidence available with me. I was not able to get audit evidence available. At that point in time, if I give a key audit matter that this was of most significance and this is how I received the audit evidence, on one hand, my opinion says I don't have audit evidence. On other hand, key audit matters, by including key audit matters, I'm saying I received the audit evidence. They become contradictory altogether. That's why we discussed earlier that when there is a key audit matter, when there is a disclaimer of opinion, we will not report key audit matter. So if I just go back to the page in the study material, so at that point in time, I remember I said just park it as of now, this one.
Yes, sir.
Unless required by regulation or law, when the auditor disclaims an opinion on the financial statement, auditor shall not include a key audit matter section. Remember that I said as of now park it on side. This is a reason that why both should not be there. Any doubt with respect to this?
No, sir.
No. Okay. If no doubts, so tell me, is key audit matter applicable to all the audits? Reporting of key audit matter is applicable to all the audits?
Yes, sir.
Okay. Applicable to all kind of audits. So if I perform, any kind of audit, it will be applicable to them. Or it's only applicable to statutory audits. Which kind of audits, require key audit matter? Where, like, which particular audit requires disclosure of key audit matter? We never discussed. Like, am I required to report key audit matters in tax audit? Yes, no. Very good. Very good, Sumit. So what is the scope where, if let's say, for example, you are saying, okay, not all the audits require key audit matter disclosures, then which audit requires? When is key audit matter
Required
disclosure?
by laws and regulation or listed entities, of course, उनके भी तो लगेगा ही.
Yes, very good. So if there is a requirement of law or regulation when it comes to the key audit matter, okay, if the law or regulations requires you to disclose this particular part, or there is an audit of a listed entity, in both of the cases reporting of key audit matter is mandatory. Okay, so two scenarios: one where the entity is a listed entity, at that point in time key audit matters is applicable. Okay, number two, if the law requires to report you the key audit matters, again at that point in time also this particular standard will be applicable and reporting of key audit matters will be applicable. Okay, or you may think that, okay, when the law does not requires, it's not a listed entity, but still, okay, but still, as per as per the policies, that auditor thinks that it is necessary to disclose or communicate key audit matter, then also key audit matters are reported. It is not like that, if law doesn't say anything, it is not a listed entity, I am prohibited from reporting on key audit matter. No, if as an auditor, okay, I decide to communicate key audit matters, then this particular essay will be applicable. So this essay applies to the audit of complete set of general purpose statement. I'm again repeating, this essay applies to the audit of general purpose, full set of general purpose statement. Why I'm saying this particular statement? Reason because when it comes to the key audit matters, again we will see when it comes to the audit, okay, when we'll see chapter number 8, we will see opinion being issued on single FS. Opinions being issued on single FS. So at that point in time also, this is not applicable because it is not a full set or a complete set of general purpose financial statement. So when key audit matters are applicable, number one, when it is a complete set of general purpose financial statement of listed entity. Okay, complete set. I'll add the word complete set of FS. Okay, of listed entity, an audit of listed entity. Second scenario, when the auditor thinks to communicate, it is appropriate to communicate the key audit matter. It is totally at the discretion of the audit. So sometimes, firms have this internal policies, okay, as per the SQC1 and SA220, that not for the listed entity, but entities which are, public is substantially interested. It might not be listed, but still it is a public interest entity, or financial institutions are interested, entity where there is a high debt, or they might come up with a set of requirements or set of thresholds or parameters where they can use those parameters to report the key audit matters. So that is totally upon the firm or the policy that the firm follows, or the auditor, that if he thinks it is appropriate to communicate the key audit matters. Otherwise, for the complete set of FS, in the case of audit of listed entity, this is applicable, mandatory. I'm saying this is mandatory. The next part is a voluntary part at the discretion of the auditor, wherever he wants, unless and until it is not prohibited by law. Clear? Any doubt? Any doubt? No? I have one doubt. What if there are no key audit matters? What if auditor says there is no key audit matter? Can it be a scenario where I can say there is no key audit matter? Can it be a scenario where the auditor says there is no key audit matter? Not a single key audit matter. There is nothing to report under this section. Can it be a scenario? Yes, no.
Yes, sir, it is possible.
Okay. Anyone else with a different answer?
सर ऑल्दो इट्स अ जजमेंट ऑफ ऑडिटर कि उसको क्या सिग्निफिकेंट लगता है, बट अगर हम बात करें कंप्लीटली सेट ऑफ होल सेट ऑफ ऑडिटिंग की लाइक स्टैच ऑडिट, उसमें हमें ऐसे पॉइंट्स मिल ही जाते हैं कि की ऑडिट मैटर निकल ही जाता है, क्योंकि सब चीजें किसी ना किसी एस्टिमेशन या किसी ना किसी वैल्यूएशन पे जो सिग्निफिकेंट है, जिसको निकालना थोड़ा सा टफ होता है, अकॉर्डिंग टू द लॉ एंड रेगुलेशंस भी रिक्वायर्ड हो जाते हैं। प्रैक्टिकल सिनेरियो में अगर हम बात करेंगे तो जाके क्या मिलना मतलब ठीक है, इजी है, बट रादर देन कि हम इसको जस्ट जजमेंट पे छोड़ दें।
Correct. So usually it is not, it could be a very rare scenario where key audit matter is not there. But yes, as I say, as you correctly said that, usually key audit matters are there, but there could be a scenario, a rare case scenario where there is no key audit matter. For example, I'll give you a simple example. A company is there, listed entity. The role of the listed entity is investment company, means they have invested in other companies and they receive the dividend. Now someone might say, okay, valuation of those shares is also key audit matter, can be a key audit matter. Hypothetical example, they are not invested as of now, they are investment company, but they liquidated all the investment and they only have the bank balance with them and no other income. Worst case scenario, like, I'm talking about rarest of rare. In that case, yes, there could be a scenario where, you don't have such kind of assets which require either valuation or, any such of any such, procedure. Only bank balance is there with the listed entity because company sold its business operation, everything done and dusted in the last year. In the current year, they only have the bank balance and the equity. That's it. And they intend to start new business, something like that. In those scenarios, you may come up with a case that, okay, we don't have any key audit matters. At that point in time, in the key audit matter section, include that particular statement that auditors, as per the auditor's determination, there are no key audit matters to communicate. One more scenario can be there where there is no key audit matter to report. The scenario is when all the key audit matters are matter of qualification, or the key audit matter is the going concern, or they are matter of qualification. So they are already covered by the qualified opinion or adverse opinion. So the matter of qualifications or matters of adverse opinion were the key audit matters, and they are already covered under the basis of adverse opinion. Now I don't have a key audit matter separately to report apart from that. In that case also, I would put a statement that, okay, there are no key audit matters to be communicated in the audit report. There could be a scenario, okay, there were 10 different issues or areas which were critical, but all contain misstatement. And that's why I have to issue an adverse opinion. So adverse opinion and key audit matters, like, you have an adverse opinion, multiple items going into the multiple items into the basis of adverse opinion, then how you will have a key audit matter at that point in time. So in those scenarios, you need to just add a statement that there are no key audit matters to report. Clear? Any doubt with respect to the key audit matter? Any doubt? No? Okay. What I propose here is, let's take a 5 minutes break, because 5 minutes break we have taken earlier due to the IT issues. Let's take a quick 5 minute breaks, not more than that. And after the 5 minutes, we'll come back and continue the session. Okay. Let's take a quick 5 minute break. Yes. Now, what we will do is we'll go through the SA 701 from the study material to have an understanding how it is enumerated in the study material. And when you will read, you will get a good understanding of then SA 701. So SA 701 in your study material is given at page number 7.21. Okay. If you come to 7.21, you will get point number 4, which is 701, communicating key audit matters in the independent auditor's report. Okay. Again, that it gives, what is key audit matters, like they in professional judgment were of most significance. Okay. In the audit of financial statement for the current period. And key audit matters are selected from the matters with those charged with governance, which are communicated with those charged with governance. So, professional judgment that it is most significance. And it is from the matters communicated to those charged with governance. Okay. Those are two conditions. Now, you have a purpose like, like what is the purpose of key audit matters? Why we need to report key audit matters? So this is an additional information, but for the users of the financial statement to assist them in understanding those matters. Like which are those matters of most significance and how auditor has, addressed those matters. Scope, when it comes to the scope, like these are applicable, with respect to the audit of a financial statement as a whole. So remember, as I said, complete set of financial statement. Complete set of financial statement. When you have a complete set, not a single FS. Single FS covered by 805, key audit matter not applicable to them. Okay. However, not a substitute. So this is not a substitute for your qualification. Okay. So expressing a modified opinion. So it is not a substitute for a modified opinion, not a substitute for material uncertainty paragraph that is there as per SA 500, plus not a substitute for the disclosure in financial statements. Okay, so it is not a substitute of these areas. Then you cannot, okay, have a separate opinion on key audit matters. Okay, you cannot have a separate opinion on key audit matters. So key audit matters should have a same opinion. Like remember, we saw in our example that they mentioned that we do not have a separate opinion with respect to these matters. I just go back quickly. Sorry. Yeah. If you see this particular paragraph, we do not provide a separate opinion on these matters. So I cannot say that I have a modified opinion on the key audit matters. No, no separate opinion is there. You are not required to issue separate opinion on the key audit matters. Okay. Applicability, it is applicable to the complete set of general purpose financial statement, listed entities required by law, or circumstances when auditor otherwise decides to report the key audit matters. Okay. Plus, remember, SA 705, when you have a disclaimer of opinion on financial statement, you are not required to issue key audit matters. It prohibits you. So, disclaimer of opinion prohibits the auditor from communicating key audit matters. Important part, very important part. Determining the key audit matters, areas of higher risk, significant auditor's judgment. Okay. And your event that has a significant impact on the financial statements. Okay. So significant auditor's judgment relating to the areas or management judgment, accounting estimate, estimation uncertainty, areas of higher risk, effect with of transactions or events which is significant on FS. These can be the key audit matters. Communicating key audit matter, then okay, what you need to communicate is that what is a key audit matter, description, and how these matters were addressed in the audit of a financial statement. If there is no key audit matter, then just mention that, mention that there are no key audit matters. So this is example that we discussed of key audit matters. There is another example given over here, extract. You can refer to this extract. Okay, so that is the key audit matter in your study material. Any doubt? No. Okay, if no doubts, quickly we will proceed to the next topic for today. And that next topic is Essay 706, where we will be discussing about EOM paragraph and OM paragraph. Essay 706, very important essay, because this essay describes how to use EOM paragraph, that is the emphasis of matter paragraph, and other matter paragraph. So what are the points that we need to take care when we are including emphasis of matter paragraph and other matter paragraph in our independent auditor's report? Can someone tell me when to use emphasis of matter paragraph? When to use emphasis of matter paragraph? Anyone? Come on, guys. When to use emphasis of matter paragraph? No? Okay. Can anyone tell me the difference between emphasis of matter paragraph and other matter paragraph? Why I have two different paragraphs? One emphasis of matter paragraph, one other matter paragraph. Why do I have two different paragraphs? What is the difference between both of them?
Sir, the emphasis of meta paragraph is when auditor wants to the attention of the users at some significant point or explanation, then he will refer that point in the emphasis of meta paragraph.
Okay. And what about other matter paragraph?
Sir, other matter paragraph is other information which is required to understand the financial statement for the user of that statements,
Okay.
which is not covered in the financial statement. Information which is not covered in the financial statement.
Okay. Anyone else with something more to add or a different answer? See, guys, I'll request everyone to participate and answer. Reason because the more you will answer, whether it is wrong or right, doesn't matter. The moment you answer, you will remember what is the correct answer, because the time when I will provide you the correct answer, you will compare with your answer and you will remember till the time of exam. Okay, this is the difference. This was the answer. I provided this answer, but actual answer is this. So I would request everyone to participate. Anyone? What is the difference between other matter paragraph, emphasis of matter paragraph? Okay, no issues. Let me tell you. First of all, emphasis of matter paragraph. As the name suggests, okay, it provide or it emphasize something. Now, what is emphasizing? If I talk about the term emphasizing, what is that? Okay. If I say I want to emphasize something, it means I want to, if provide some, importance, give special importance or value to something. I'm emphasizing with that. I'm putting, some stress, or I'm defining that particular part, something, more clearly. Okay. So giving special importance, that is the term emphasis, emphasizing. Okay. Now, when it comes to the emphasis of matter paragraph, I'm emphasizing a particular matter. I'm giving importance to a particular matter. Remember that always. Emphasis of matter paragraph, I'm giving importance to a matter. You can give importance to a matter when that matter is disclosed in the financial statement. You can only give importance to a matter when it's disclosed in the financial statement. So, emphasis of matter paragraph refers to the matter that is appropriately presented or disclosed in FS. First of all, it talks about appropriately reported or disclosed in FS. Then the second part is that in auditor's judgment, in my judgment, this particular matter is of such importance that it is fundamental to the user understanding of FS. Means for me, as per my understanding, this is necessary for the user to understand the financial statement. Two aspects. One, disclosed in the FS. Second, fundamental to the user understanding. Disclosed in the FS or fundamental to the user understanding. Then I would say this matter qualifies for the emphasis of matter paragraph. So appropriately disclosed, in FS plus fundamental to user understanding. Okay. Again, matter disclosed in FS. This is there. I'll just remove this. So remember this particular chart I'll show you. So matter disclosed, important and fundamental to the user understanding. Another point, it is fundamental of the user understanding of FS. Special importance should be paid to FS. Why? Now, if a matter is disclosed in the financial statement, can the matter be related to the audit or auditor's responsibility or audit report? Do you think management will report something related to the audit in the financial statement? Yes or no?
Yes, sir.
Have you seen any such disclosure related to the audit or auditor's responsibility or audit report in the financial statement?
No, sir.
Exactly. Because financial statement comes first, then comes the audit report. You might have seen in the board report or annual report or something else, which is prepared based after the issuance of audit report, but not in the financial statement, because the chronology is financial statement, then the audit report, and then the other things. Now, if the matter is disclosed in the FS, it has to be related with the FS. It cannot relate to the audit report, audit or auditor's responsibility. Okay, so that's why matter important. That's why I'm emphasizing It is disclosed in the FS appropriately. Again, appropriately. If it is not disclosed in the FS, appropriately, if it is not appropriately disclosed, then what will happen? Let's say a matter which is the fundamental to the user understanding, related to the FS, important, okay, but not disclosed appropriately in the financial statement. What you will do? Come on, quickly. Matter which is fundamental to the user understanding, related to FS, but not appropriately disclosed in the financial statement. Will you include that matter in emphasis of matter paragraph?
So we can also communicate with the management also, no, to disclose properly in the financial statement.
Let's say they deny. They're denying. We will not disclose. Whatever we have done, this is there. Where you will disclose? Will you disclose in the emphasis of matter paragraph?
अगर सर उन्होंने डिस्क्लोज ही नहीं किया है तो फिर हम उसका रेफरेंस कैसे देंगे?
So they have disclosed something, but not appropriately.
Not appropriately.
What you will do?
Then we will disclose in the emphasis of matter paragraph with the reference of that point that we have audited this, and we find this significant issue
Correct.
to
Yes.
यानी यूजर्स को उनके उनके नोटिस में लाने के लिए.
Okay. Understood. Anyone else with a different answer? No? Okay, Sumit. So you are saying other matter paragraph. Okay. Let's go back to one of the essay. 705. I discussed this point. If in relation to a disclosure, if such disclosures are fundamental to the user understanding and they are not there, then the matter could be pervasive also. Already there is a material misstatement by not disclosing the matter appropriately. It will be a matter of qualification, but it can be a matter of material plus pervasive misstatement. If those disclosures in cumulative nature are fundamental to the user understanding. So first of all, understand if particular disclosure is not there appropriately as per the financial reporting framework, which is fundamental to the user understanding, it will have a qualified opinion. But there are high chances that it may turn to the adverse opinion because pervasiveness can also be there. Remember, yes or no?
Yes, sir.
Yes.
So
सर कैसे
yes.
लिंक हो जाता है ना, अभी जस्ट सोचते ही रहते हैं जब तक आपका आंसर आ जाता है कि क्या हो सकता है.
So actually, if you see, everything is interlinked. It's not something, working in the silos like, okay, this is there, this is there. Everything is totally linked with, going with the logic. Something not appropriately reported, qualify. Or it is fundamental to the user understanding of such nature, may go to the adverse. Same here. That's why I said it should be appropriately reported. Otherwise, it will go to your qualification. Okay. So emphasis of matter paragraph. Again, appropriately disclosed, importance, okay, and fundamental to the user understanding in relation to the financial statement. That is your emphasis of matter paragraph. We will see an example also. Okay. So just to show you an example, not this one, sorry. Just give me a minute. Let me bring the example. uh, statement. I'm not sure, there is some issue at my end. I'm not able to open this particular file. Okay, I'll show you in a while. Let me, try to open again in some time. Okay, might be a issue, technical issue at my end. But emphasis of meta paragraph when reported in the financial statement, they are basically, reported in a way that, first a reference is provided of that particular paragraph of that particular matter. Okay, yes, now it is working. Yeah. So see, this is emphasis of matter paragraph. Okay. Now, what they are doing is they are drawing attention to the following notes of the standalone financial statement. Again, bringing the attention of the user to the following notes. That note 31 regarding the ongoing investigation by SFIO of Ministry of Companies Affairs, Enforcement Directorate, and regulators and agencies against the particular company and some of its subsidiaries. The standalone financial statement for the year ended March 31, 2024 do not include adjustment, if any, that may arise on account of the ongoing investigations by the investigating and other agencies and regulatory authorities. Again, note 51 regarding the non-receipt of confirmation of balances as of 31st March 2024 from some lenders. Again, on account of unsettled transactions, and this is kind of the thing. Okay, so our opinion at the end, what they're saying, our opinion is not modified in respect of the above aforementioned matters. Means they are just bringing the attention. Let's say this one, note 52 relating to the non-recognition of interest expense on borrowings availed by the company pursuant to the interim order and the judgment passed by the NCLAT specifying October this as a cutoff date for initiation of resolution process of this much CR for the year ended on 31st March 2024. Aggregate amount of interest not so recognized as of March is this approximately. Okay. So these are the matters which are reported in emphasis of matter paragraph. Again, opinion is not modified in respect of these matters. If the opinion was modified, then it would have become part of your qualified opinion. Okay. So this is how emphasis of matter paragraph is reported. Number one, I provide a reference to the particular part of the financial statement, note 31, note 51, whatever it is. Then I explain the matter. What is the matter? Why I want to put emphasis on this? Okay. So first I will explain the matter. If you see from here to here, ongoing investigation to this particular part, it is an explanation of the matter. But if you see this particular part, that the standalone financial statement do not include adjustments. So this is a reason, description, and the reason why I want to bring attention of the users to this particular part. So this particular part is a reference to the financial statement. Okay, so three segments. One, reference. Second, description. Third, your reason for EOM paragraph, like why you want to include this particular part as a EOM paragraph part. Clear? Any doubt with respect to the reporting of emphasis of matter paragraph? And remember, when we discussed our audit report, we discussed that first it will be opinion. Second, it will be basis of opinion. Third, it will be material uncertainty. Fourth, it will be emphasis of matter paragraph. And then Fifth, your key audit matters. This is how, the flow is. Fourth will be your emphasis of matter paragraph. Any doubt? So that was my emphasis of matter paragraph and the way I reported in the audit report. Now coming to other matter paragraphs. Now then, what is other matter paragraph? We saw the emphasis of matter paragraph. What is other matter paragraph? We have discussed one example of other matter paragraph. Can anyone tell me which is that example? We have discussed one example of other matter paragraph. Anyone? What is that example? No? Okay, let me tell you. I thought you will remember. No issues. So, when it comes to the other matter paragraph, do you remember SA 600?
Yes, sir. You have asked the question, what is the problem in this paragraph, and the auditor has shown the name of the internal auditor, that it is work done by the internal auditor, and that is the problem.
Yes, absolutely correct. Plus, when we were discussing SA 700 also, at that point in time, I specifically read other matter paragraph. Remember, I pointed out
Yes.
that SA 600 plus SA 706 both decide the other matter paragraph. SA 600 says report this particular part into other matter paragraph, and other matter paragraph is designed as per SA 706.
Yes, sir.
Now, one thing to notice is in other matter, like whatever we have seen as of now, let's say, for example, SA 600 part, it is not related to financial statement. Is it related to financial statement or is it related to the audit? The matters we have disclosed is related to the financial statement or is related to the audit?
Related to audit.
Absolutely, yes. So as of now, in other matter paragraph, what we have reported is the matters related to the audit. See what they are saying. We did not audit. They are talking about the audit of financial statement. You will say, sir, financial statement is mentioned. No, it is audit of financial statement. They are talking about audit. Okay. So when you have to report regarding audit or auditor's responsibility or audit report, if you have to report something on these three topics, audit, auditor's responsibility, or audit report, you will use other matter paragraph. It has nothing to do with your financial statement. So other matter paragraph refers to the matter other than those presented and disclosed in the FS. They are apart from FS. They are not there in the financial statement. They are beyond financial statement. But on the same time, they are related to the audit, auditor's responsibility, or audit report. And in the auditor's judgment, they are relevant to the user understanding. Okay. In auditor's judgment, they are relevant for the user understanding. Means something which is relevant to the user understanding related to the audit auditor's responsibility, auditor's report, which is not reported in financial statement, that will be reported in other matter paragraph. Best example, SA 600. It is never reported in financial statement that this particular part will not be audited by auditor, or this is audited by some other auditor. When you see consolidated financial statement, do you see a paragraph or some disclosure in the financial statement that, okay, this is not audited by the group auditor, this is audited by the component auditor? No, there is nothing related to that. So it's beyond financial statement, number one. Second, it is relevant for the user understanding, because they should understand that this is not audited by the principal auditor, rather this is audited by the component auditor, and principal auditor has relied upon the work performed by the component auditor. It is relevant to the user understanding. And the third part, it is related to the audit and auditor's responsibility, because here auditor says that it is the responsibility of the component auditor to audit, and I as an auditor, principal auditor, has relied upon the audit performed by the component auditor. So it is related to the audit of consolidated financial statement plus principal auditor's responsibility with respect to audit of consolidated financial statement. All these matters, all these criteria get satisfied. That's why SA 800 says, okay, go and report in your other matter paragraph. Go and report in your other matter paragraph. So if you see that we did not audit, it is related to the audit. Okay. And these financial statements have been audited by other auditors, whose report has been furnished to us by the management. Okay. Then what they are saying is, insofar it relates to the amounts and disclosure in respect of these joint operations, and this is our opinion is solely based on the report of the other auditor. So they are specifying. Again, if we see one more paragraph, we did not audit the financial statements or information of 2 subsidiaries and 58 step-down subsidiaries whose financial statements and information reflect total asset of this many CRs, revenue, net cash flow amounting to this much at the year end in the consolidated financial statement. CFS includes the group share of net profit and other comprehensive income of this much CR at the year end in respect of 6 associates, 4 joint ventures, whose financial statement and information has been not audited by us. These financial statements, financial information have been audited by other auditors whose report has been furnished to us by the management, and in our opinion on the consolidated financial statement, insofar it relates to the amounts and disclosure included in respect of these subsidiaries, step-down subsidiaries, joint ventures, associates, and our report in terms of subsection 3 of section 143 of the Act, as so far it relates to the aforesaid subsidiaries, step-down subsidiaries, joint venture, associate, is solely based on the report of the other auditors. So again, what they are saying is, what they have done, it is related to the audit, and they have relied upon the work performed by the other auditor. So they are providing what is their responsibility, which is relevant for the user understanding. This one, very important. 2 of these step-down subsidiaries are located outside India, whose financial statement and other financial information have been prepared in accordance with the accounting principle generally accepted in their respective countries, which have been audited by other auditors, generally accepted auditing standards applicable in their respective countries. Outside India, outside GAAP, outside auditing standards. Group management has converted the financial statement and information, okay, located outside India from accounting principles generally accepted in their respective country to Indian GAAP. We have audited these conversion adjustments made by the group management. Our opinion, as so far relates to the balance and affairs of such step-down subsidiaries located outside India, is based on the reports of other auditors and the conversion adjustment prepared by the management of the group audited by us. Again, they are saying what is bifurcated. Like, they only audited the adjustment, not the amounts or the figures which were there in the original report. So they are, again, from point to point, they are identifying matters which are relevant to the user understanding. This is relevant for the user understanding to understand with respect to the conversion. It is related to the auditor's responsibility because auditor is saying that he has relied upon the work performed by other auditor. Okay, auditor's responsibility, audit report, matter not included in financial statement. There is no reference to this particular point of conversion and audit of the conversion adjustment only by the auditor in your financial statement. It will never be there. And that's why those matters are reported in other matter paragraph. So there are multiple things also. Other things are also there, which are reported in other matter paragraph, but similar, all are on the same lines. So this is your other matter paragraph, which talks about basically matters related to the audit, audit report, and auditor's responsibility other than presented in your financial statement and which is relevant to the user understanding. Clear? How to report the matter in other matter paragraph and what to report. Any doubt with respect to the difference between other matter paragraph, emphasis of matter paragraph? Any doubt? See, it is very important to understand the difference between both. Both have a separate purpose. Okay, one is related to the financial statement, one is related to the audit. And other matter paragraph comes after the key audit matters, auditor's responsibility and everything. Okay, so it is the last paragraph, you can say, before other regulatory matters and everything. Okay. Now the question comes, can I report matters related to the going concern in other matter paragraph? Can I report material uncertainty in other matter paragraph? Can I report key audit matter in other matter paragraph?
No, sir. There is separate essay for the key audit matter, no?
Okay, very good. Yes. Can I report a material uncertainty in other matter paragraph or EOM paragraph? Let's say management has disclosed material uncertainty appropriately in the financial statement. There is no point for qualification. Can I use EOM paragraph to report material uncertainty? Yes or no? Okay, tell me what was the requirement of SA 570? Where to report material uncertainty?
Sir, required here other matter paragraph and an emphasis of matter paragraph to report 570 essay.
So so you are saying SA 570 says to report that matter into EOM paragraph.
If material uncertainty exists,
let's say there is no qualification on material uncertainty. Management has disclosed appropriately. There is a material uncertainty that as an auditor, you are also required to disclose. So what SA 570 says? Where you should disclose? Anyone? We have discussed SA 570 multiple times now. We have seen live examples where material uncertainty is reported. Anyone? No?
Sir, we will state in the audit report in the going concern para na, related to going.
Yes, yes. Very good. Yes. Now, SA 570 specifically talks about a paragraph. I'll show you an example. This is material uncertainty relating to going concern. SA 570. When SA 570 says please disclose in a separate paragraph, why to mix up? So material uncertainty relating to going concern is the paragraph number 3. Emphasis of the matter was paragraph number 4. Just now we discussed that one opinion, two basis of opinion, three material uncertainty, four emphasis of matter. When SA 570 asks you to separately disclose, then why to mix up? Got the point?
Yes, sir.
Basically, your EOM paragraph or OM paragraph should not be used first for a modification, which is as per SA 705. Second, it should not be used for CAM, which is SA 701. Third, it should not be used for going concern related disclosures, which is your SA 570. EOM paragraph, OM paragraph are not the substitute of modification, CAM, going concern. Remember that. Even they themselves are not the substitute of each other. Like you cannot report a matter of EOM paragraph in the OM paragraph, in the OM paragraph, in the EOM paragraph. Then how can you report the matters of other paragraph into them? Are you
Yes.
getting the point?
Yes, sir.
So whether it is material uncertainty related to the going concern, whether it's a modification, whether it's a key audit matter, they should not be reported in other matter paragraph or emphasis of matter paragraph. Usually students get confused with the going concern and EOM paragraph because see, matter is similar. Like, going concern appropriately disclosed by the management. Auditor provide the reference to the note. It is fundamental to the user understanding. Okay. It requires to be disclosed. So sometimes students get confused between the EOM paragraph and the material uncertainty. But remember, material uncertainty is not only fundamental to the user understanding, it is very much critical and very much important. That's why such a importance is given to this particular topic, and a separate reporting paragraph is added because your financial statement going concern, remember your financial your accounting assumptions that you might seen when you started learning accounting. Yes or no? Remember accounting assumptions, going concern assumption.
Yes.
Assume the business will continue to operate.
Yes, sir. For the foreseeable
It is
future.
a base of accounting. And if something happens to the base, your whole accounting go for a toss. That's why such a importance is given to going concern, and a separate reporting paragraph has been added, not to be included in the emphasis of matter paragraph. Always remember that. It is such an important topic. So EOM paragraph, OM paragraph should not be used for modification, CAM, and going concern. And yes, again, you have to add the line that your opinion is not modified for the matters enumerated in the EOM or OM paragraph, because it's not a substitute for the modification. It's only a paragraph for the disclosure. So you have to add a line that your opinion is not modified in respect of the matters reported here. So this was your SA 706. Emphasis of matter paragraph and other matter paragraph. Clear? Any doubt till now? Any doubt?
सर कोई डाउट नहीं है एक्चुअली, बट you have not uploaded the notes and the questions you done in the class related to chapter 5 and 6.
They are there on the portal. I have already uploaded.
बट सर शो नहीं कर रहा है.
Let me check once again. They should appear, but let me check once again with the team why they are not appearing. I think you were facing this error earlier also, no? They were not showing to you.
ये सर नोट सॉरी चैप्टर 3 एंड 4 का शो नहीं कर रहा था, बट नेक्स्ट डे जब आपसे यानी कम्युनिकेशन हुआ था ना, फिर उसके दूसरे दिन अपलोड हो गया था, दूसरे दिन शो किया था.
Okay, let me see why they are not appearing.
यस सर.
Yeah. Any other questions?
नो सर. थैंक यू सर.
Okay. So this was your emphasis of matter paragraph and other matter paragraph. In the next section, what we will do is we will proceed further and we will discuss the rest of the essays, that is 710, 720. And we will also discuss one important circular which is issued by SEBI with respect to the withdrawal of the auditor from the engagement. So I would request everyone to please read the subsequent study material. Okay, be clear with the topics, ask your doubts as much as you can, because next lecture and the next lecture will be very, very important also. We will understand something new, like SA 710, SA 720. Plus we will also see in the subsequent session that we are talking about Companies Act, provisions of Companies Act, section 143, 143.3 and the rule 11. Okay.
Yes,
So
sir.
if no further doubts, then I propose to close the session here. And thank you guys. Thank you for participating. I will see you in the next section.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you. Yes. Good night.